although we will look at this disclaimer and explain that the material here is intended for a global audience, please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity. Also, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here and on the websites and in the terms and conditions. So we thank you for your attention on this important topic. And with that said, we're going to take a look today at price action, at support and resistance. To be precise, that's going to be the main focus of today's webinar. As always, though, we can use this checklist that I introduced as the standard element for basically analyzing whether the market is matching what we're looking for in a strategy. That could be basically used, this checklist could be used for any type of strategy. You can fill in any kind of configuration that you want, and you can use this step module to see indeed if we are entering at a spot that isn't basically we're not jumping the gun or chasing the market. Jumping the gun would be too early, an entry that's too early. Chasing the market would be an entry that's too late compared to our trading plan. So a checklist like this is useful because often enough emotions are high. It's good to limit them, but the market is full of emotions. The price does make lots of ups and downs, so it's easy to lose sight and maybe enter upon emotions. So if we follow this checklist, we reduce that chance that we are indeed emotionally making decisions because we see some big volatility jump in the market, and we wish we would also be in that trade, and then we jump in, and you know this is good to avoid it. So the trend, opportunity filters, trigger, and entry method are things that could be done to avoid that. This is something you can take a look at Facebook or Twitter for Admiral Markets, and you can stay up to date. Today's calendar. We have Bank of England Governor Carney speaking. Otherwise, not so much news in the Eurozone today. Irish GDP, Italian 6-month bond, actually, otherwise just some U.S. lighter news apparently. Alrighty. Good. So let's go to our Forex market and take a look what's going on. So looking for price action. So we got a price action indicator, candlestick indicator. Yesterday we had some upside, but it has been choppy with this euro dollar. The upsides have occurred, but it took a while. As I said, look here, up, pull back, go. We didn't break this trend line before we got the break, though. That's something we were looking at yesterday, saying look for upside on the euro dollar again. That did materialize, so that was good, but it really didn't go all too far. The profit potential was quite limited. So what happened now? We got some Asian session consolidation, and it seems like we're moving up again, engulfing here, bullish engulfing off the daily pivot point. We also had some bearish price signals, but overall the trend is still up. Looking at the moving average here, so to me this is not looking like a good currency pair to look for price action at support or resistance, because basically the currency is basically lightly trending to the upside. So the only thing that would make sense is off of a daily or weekly pivot, for instance, but that doesn't seem too likely anymore because we already bounced off the daily pivot. So it doesn't seem that likely. The only thing I can think of is a reversal trade maybe from this level. If price gets there and shows a rejection off of that resistance, then that could be something that is worth looking for. Otherwise, at the moment, there seems to be more breakout potential than reversal potential on the $0, to me at least. The trend is up. It's not a fantastic trend. It's a very choppy, slow moving trend, but it still is overall moving up, and therefore I wouldn't speculate. I don't think that looking for price action signals to the downside from here is worth it. It could happen, by the way. I'm not saying that it's impossible for price to move down from here. It's just two things. The trend is up. Second of all, there's no key level, no key resistance spot somewhere in here that would increase the likelihood of that being a bouncing spot. I mean, it could turn out to be a reversal spot and price flies down to 136. But I like to use confluence. I like to use multiple things that could basically support a potential reversal trade or with the trend trade. I don't see that here. There's nothing. There's a daily R1, okay, the weekly R1, but in fact, those levels, the weekly R1 was already respected yesterday. There's no key level, no very big level that I think is worth looking for that. Maybe you see it. I don't see it. Maybe you use a different tool than I. So therefore, I wouldn't be looking for reversals here. Alrighty, let's move over to the pound dollar. Pound dollar is caught between the weekly and daily pivot. It's very triangle-y. So this is more of a range at the moment within an uptrend, though. That we shouldn't forget. This is an uptrend on the 4-hour chart. So that leans basically maybe an advantage to the upside break. But that's a breakout trade, not a price action at the candlestick pattern. So here, I wouldn't see any price action at support or resistance that makes sense. There is maybe this wick, this hourly rejection bar at the weekly pivot. That might be interesting. Otherwise, but not even that, to be honest, because as I said, we're actually slightly, we're in an uptrend, so that would actually be the opposite direction. Plus, if you look at the daily pivot pretty close by, price is right in between the weekly and daily. So no, actually, I take that back. No, not something that would fit within today's webinar. There could be that breakout potential. Break, pull back, and go. That's the only thing I think that could be valid for the pound dollar to the upside. How about the odd USD? Made indeed the bounce yesterday. We were talking about the odd USD potential bounce somewhere at the bottom here, remember? It had 3, 5, 6 candles, didn't break this bottom. So I said, well, normally speaking, if it doesn't break 5 to 6 candles, that is showing weakness. That would probably be a bouncing spot because usually if you have momentum, the candle low gets or candle high gets cut every single candle. Or if not every single candle, then every second, third, fourth, or fifth. If it's not within 5 or 6, then that impulse is most likely, that momentum is most likely finished, and there's a chance of a correction, reversal, retracement, consolidation. We don't know which one. In this case, we saw it looked more like a deep retracement slash reversal. We don't know, but it's in any case a lot of speed here. So that's basically very useful tool, isn't it? And yeah, we did had this was a good engulfing twin maybe here. It doesn't show officially on the indicator, but it does look like that. So well, anyhow, that was a good bounce there. Now we do have daily pivots and weekly pivots. So price action from that point of view could be maybe interesting. Potential there for continuation to the upside. The other idea would be if price gets maybe higher, closer to these levels, and look for a rejection bar. So those are basically the potentials there. at the moment, I think there's more of a breakout opportunity than a price action at support or resistance. I mean, yeah, price action at support or resistance. So why is that? Well, because we are already definitely in a good uptrend here on the hourly, 15 minute, excuse me, and the hourly too, by the way. So we had a good spike up and a nice channel to the upside. So these were good potential dips. Well, maybe not the last one, but Kiwi had a Harami right there within this uptrend. Why is it uptrend? Very strong moving averages. We were looking at the Kiwi yesterday too and said that 2 is a bouncing spot as well. That actually worked out even more. That flew up a lot more than the Aussie, in fact. So that was also the reversal spot. Unfortunately, yesterday's topic actually didn't match the environment, and today's topic is actually would have been perfect for yesterday, because if we would have looked for price action at support or resistance, then I don't know actually 100% if this was what we were looking for at any case. Not sure what kind of support levels were here anymore. So not 100% sure about that, because today's pivot points are looking different. But anyhow, we did discuss it, I remember. But now the only thing that could make sense is maybe rejection here, because it is getting close to a weekly R2 and daily R2. So it has eaten a lot of real estate. It has moved up a lot, but that's not really that important. The most important is that it's pretty close to the confluence of a ATR expected high, a weekly R2 and a daily R2. So if we get some wick there, if we get some candlestick pattern there, a Harami or a shooting star or engulfing, then looking for a back to the mean trade, I do think has a decent potential. We already have double divergence, or at least single divergence on the 50-minute chart. We have bad divergence. Well, we don't have it yet, actually. But yeah, that's the thing with the hourly. There could be one more push up, one more dip, and one more push before maybe we get a bigger correction. So that's something we have to be careful of before this starts heading back to the zero line. Richard is asking about head and shoulders. Let's take a look. I think Richard was talking about the AUD-USD. Well, it doesn't look so to me. It looks, if anything, there is potentially, of course, a double top, but we would only know if it's double top if price would respect this level with another couple of candles here like that. And it could be double top potentially, but at the moment we don't know that, because the currency is like right at that high, which means that we're still not sure if price will go through it or not. We will need a fractal there at least. The dollar CAD and dollar yen somehow do not really appeal to me. There is a Harami here at the daily pivot. Plus we do have bearish moving averages. Let's see. Yeah, I don't know. I'm not a big fan of this dollar yen in any case. But there is that bearish momentum. I don't know. This doesn't really look all too great to me. Looks like it's in the middle of a triangle, and then I don't like these patterns too much, because it really, the market doesn't obey to them that much. I mean, it doesn't listen to them too much. If you get basically a consolidation in triangles like that, especially if the triangle is so tight like it is at the moment. So I would be cautious of that. Richard's saying possible head and shoulders, with emphasis on possible. Yeah, I don't mean any disrespect, first of all, but to me it doesn't look so. So, I mean, if you do see it, that that's fine. I mean, everyone sees different things, right? That's part of the market. So, and I definitely encourage comments and feedback. So I don't want to, give negative feedback and discourage people from writing. That's far from my intention. Um, but to me, Head and Shoulders would be on the IUSD if this level would be lower, something like this, for instance, then it would make sense. But then this level would have to have been lower, more equal to this level. Then I would agree with you personally, because the right level is equal to the head. Then that's why it's more like a double top than an HNS, in my opinion. Urian is the same choppiness. I'm just going to see if there's a pair that makes sense to discuss, because otherwise I'll just skip it. Uh, no, not too enthusiastic at the moment about these yen pairs in general. Sorry, can't do anything about it. Well, this is an example. Maybe the Harami here at the daily pivot um, could have been worth an attempt, maybe in the Asian session if you're trading the Asian session. Not doing too bad at the moment. Not sure if I would have taken it because the monthly pivot is close by, but it is a monthly pivot, so it's maybe not a level that is that important for weekly. Sorry, for an hourly candle. I do attach a bit more importance to the weekly and the daily. Seems like we're getting a follow through to the downside. Yesterday we had some nice downside potential as well. Don't remember if we talked about it. No idea. Don't remember. Probably not, because price was still here. But there was a good follow through, hook back. So this and a break. So either here or here were good moments to potentially look for shorts yesterday. So that was a good fall with the moving average setup. That seems to be not so bad at the moment here as well with the moving averages. So there was a Harami here, potentially price action signal at the daily pivot, and now there was a moving average breakout setup. But regarding the price action at the moment, that seems to be behind us. That happens. If you're looking for a particular strategy, it's just going to take, it sometimes takes time to set up. Sometimes it takes a bit of time to hunt and monitor. And we're just looking at the market, of course, at random at a certain spot, which takes an hour. We're going to have to be, especially if we're looking at hourly signals, to be a bit lucky that the signal happens here. If we're looking at the 50-minute chart, that has a bit higher chance. Yeah, here too, the Euro odd has a bearish candle at that daily pivot point. There is a weekly pivot point still underneath, plus a daily S1 and a monthly S1. Maybe something to keep an eye on, because it could maybe be a bounce. But I would only wait for candlestick pattern confirmations. Yeah, so that's actually it. Unfortunately, it was a pretty fast analysis regarding this price action support resistance, but that's okay. What can we do? There doesn't seem to be much at the moment. Let's take a look at a different perspective and see if maybe if we look at it from a different angle, there could be maybe something interesting going on. But from this point of view, not much. Price would have to get further into more extremes before there's potentially something to look for. For instance, this EuroCAD, maybe if it gets up to the weekly pivot point as a rejection, right? This kind of thing. Or as I was saying, if price, what was it, gets to, there was one on, I forgot which one it was. The Kiwi. The Kiwi was a good example. If it gets up to this confluence, right? That could be maybe a place to look for reversal rejections there, right? So those things, but that price isn't there at the moment, so it doesn't make much sense to look at it. We'll look at it from a different perspective right now, but give me 2-minute break. I'll be back in a second. I just need to organize something, and I'll be back in 1 to 2 minutes. All right, that was short. Sorry. I'm back. Let's see. Let me take a look here. The Swiss franc possible turn short. So let's take a look. There's a shooting star here indeed. Harami on the 4-hour chart. The daily yesterday had a piercing candle though. The daily looks a bit bullish with the moving averages and the daily candle being a piercing yesterday. That would be maybe a bit risky. Let's see. Got a bit of divergence between these 4-hour bottoms too, which is bullish as well. Hourly moving average is up. So, well, still could make sense, but I wouldn't look for it now. But maybe if it pushes up to the daily R1 and the weekly pivot, and it shows some struggle there, that could maybe be a different story. But at the moment, it's definitely showing some bullishness. If you look at the 50-minute chart, there's no divergence between these tops. So I would be careful. I mean, it doesn't have to break up immediately to the upside here, but what it could do is maybe make one more leg down and then find another bounce like that. And it could continue like this, for instance. That's something that could happen. Something like this and then bounce. So that would seem the most likely to me if I look at these indicators. Yeah. Let's see. Because if we break this top, then most likely there's going to be divergence between the 50-minute tops. That would be useful when looking for shorts. Then it's not a prerequisite. It's not a must, but considering the daily chart, then if I look at that, then it would be useful. Alrighty. By the way, regarding moving averages, I saw a study yesterday on moving averages, and it looked at a tremendous number of combinations of moving averages. It Looked also at the difference between EMAs and SMAs, and EMAs far outperformed better than SMAs. So if you're using SMAs, if you look at that study, EMAs definitely did a better job. So you might want to consider EMAs in that case. If you're using EMAs, then good job, because they did a better job than SMAs. The study was looking at combinations of EMAs. Really a lot of combinations. It was really fascinating to see that. Amazing, in fact, how also the study showed how useful EMAs are. They were looking at closes, and yeah, it just showed how very powerful the EMAs themselves are. So yeah, it's a very, very good tool. That was the first thing that the study basically confirmed, that the EMA is better than the SMA, and that both EMA and SMA are very profitable and useful. But within the EMAs, there are certain sets that are a bit better than others. The interesting part seemed that basically we're looking at one short and one longer one. And the best results were with EMAs that were around between 10 and 25 as the short one, combined with, so once again, I'll write it down here, combined with a higher one that was anywhere between 25 and 50, roughly speaking. Let me take a look here. It's on the other PC, unfortunately, but I'll find it 1 second. So that was very interesting. Basically, I was using 21 and 34, so you can see why, because that was indeed in the optimal zone here, between the low one being between 10 and 25, and the higher one between 25 and 50. So, but anywhere kind of like you wouldn't want to use, though. Obviously, you wouldn't want to use 25 and then 25. That doesn't make sense, right? If you use the green 25, you want to use at least 35 probably, right? It's also about the ratio between those two. But if you use 12, you could easily use 40. Now, for a 10 EMA, if you use 10 as the short one, 10 as the short one, is actually more optimal to use anything that is around 40 to a 60 EMA. All right? If you use 15, so now the details are coming. Okay, so 10 EMA with a 40 to 60. But if you use a 15, it's more optimal, according to this study at least, to use let me calculate it. To use between a 30 and 50. Not 40 to 60, but 30 to 50, funny enough. If you use a 20, let me write this down. If you use a 20, the optimal was actually between a 30 and a 40. I know it sounds funny maybe, but well, even up to 50 would still be okay. I'm just saying the optimal. I'm not saying that 20 and 60 is wrong, by the way. or 20 and 80, but this is the optimal. Then with the 25 as a slow one, the best was actually anywhere which also 30, funny enough, between 40 again. Funny. Although actually a 25 and 100 didn't do too bad either. But I'm talking about optimal. So yeah, so I just wanted to share with you that because I thought it was quite fascinating to see that whole test being done. Let me see what kind of data they used. It was really, I think, a substantial data. Mind you, though, that this was done on daily, as far as I can see, daily charts. Okay, so you know that might have some influence. I don't know, but that's something to add. I can't find how much data was used to calculate this, but it was a lot as far as I remember. Best one, by the way, if you're curious what the best one was, so if anyone wants these numbers, I hope you had time to write them down now. 10 with 40, 60, 15 with 30, 50. Basically, you can see that across the board, anything between, let's say, 30 and 50, right, was good for the longer one, and between 10 and 25, good for the shorter one, right, in general. But the optimal one, apparently, funny enough, what is it? What do you think? Anyone want to make a guess? Probably a bit difficult to make a guess, but that's a difficult question. According to this data, and I would still use it discretionary because it's a lot of data, but still, you want to use our own technical analysis and confirmations. But the best, according to this one, was 30 and 48.5. Now we can't use points, decimals, so obviously it would have to be 48 or 49. 13 and 48. So yeah, I don't know. 13, I don't mind using 13. Actually, I think I was using it on the hourly, right? I took it off only a couple of days ago, so might as well put it back on, I can see, because it's quite useful. So I just did it for the simplicity of charts, because I thought one would be just easier for everyone to follow along. But maybe I'll put the second one back after looking at that study yesterday. So 48, 13, 48 is the optimal. Well, I don't know. I like 13 and 34. I just like 34 because it's a fib number. So I think I'll just stick to what I had. But anyhow, it was interesting to look at that. So just wanted to share that with you, something else than usual. We got a Harami under Eurodollar, but as I said, I don't see any particular reason to short here. It could make a three-wave correction, but it's not enough confluence, not enough reason for me to find bearishness at this point. So I don't see enough confluence there. I mean, that's my view. Could be a potential breakout to the upside though, but then price would have to break above H3 short and would have to break above this fractal. Shooting star, last hour, as I said, I had some doubts about this. I wasn't interested in it because there's just prices too close to these, intertwined in these pivots. Plus, the overall bigger trend was up, but the shooting star isn't doing too bad. It did get some follow through this hour. So let's see. From a moving average point of view, the only thing that could make sense is a breakout to the upside here at the moment. Or if it were, let's see. Yeah, that's the question. Eventually, if it moves down and hooks back, it could be downside, but that will take a while. Let's continue, see if there's anything going on right now. Maybe the pound odd. It is making a good trend. Let's take a look at that one. Yeah, the downside could have some space here. The moving averages are bearish. The pivot points are lower below it. The L3 is still far away. So there's plenty of space potential to the downside. Yesterday was a very bearish day. 2 days ago engulfing. The only question is where to enter at the moment, because I think the bearishness is apparent, but what would be a good entry? The entry that, as I already discussed, what I would have liked would have been below this fractal. That already happened, though, at about 56. We actually had a retracement back to 56 just a couple of minutes ago. We're just a bit too late. Yeah, the next phase would have to be to wait for a close, a break of this blue, and a hook back probably. Even a short right now, but yeah, I'm not a big fan of that idea necessarily. I would rather wait a bit longer. The short was upon the break of this fractal, but yeah, it was the best idea was here at 58. So it's difficult to take the trade here if the trade should be already up 15 pips. So then I'd rather wait and let it break and make a hook back. So let it break, hook back, let it go back to the moving averages and show some rejection at the moving averages. That could be something. Let's see if there's anything now, though. Yesterday was a Harami on the daily chart. We already broke the low. So there's reason to look at it bearish, but the difference is that the weekly pivot is right below it, whereas the pound odd doesn't have that. So there is the slight advantage of the pound odd in that case. Pound CAD could be something to look for. Let me take a look. We do have the pound Bank of England governor, I think, speaking. Let me check. Yeah, we do. 2 hours still to go, or maybe less now. That could have been a potential short upon the break here. So pending order at 181.90 at that breakout level there might make sense with a stop loss above it. Above this top, and a target of, let's take a look, maybe this daily S2 here, about 33 pips versus 17 risk. Yeah, the reason is because we have bearish moving averages, first of all, but we're pretty, pretty early in the day, right? We still have good space before we get to bigger confluences of pivots that could be dangerous for shorts. We have a good angle of the moving averages. We have good price action. We had it move down. Actually, we have decent momentum, correction, momentum, small correction, and breaking through. So a hook back to the broken bottom where we had the break of the bottom here, of the fractal, looks to be good. We check the hourly. Not a ton of space, but decent enough. A lot of momentum on the daily chart. So that seems a decent probability here. Let's see, EuroCAD maybe 2. EuroCAD is also breaking below this trend line. So that too could be maybe something. Let's take a look. Maybe a break below this fractal on the 50-minute chart could be the same like the pound CAD actually, but then this EuroCAD hasn't broken as yet compared to the pound CAD. That could be something with the stop loss maybe below this, above this daily pivot. What could be the target? Let's see. Yeah, the target, there's not much. The pivot points are really close to each other, so probably the daily S3 here, the ATR expected low at the bottom here at 145.55 makes the most sense. About 40 pips versus 22 risk. So the EuroCAD pound CAD look the best actually for momentum trades. Wow, there's a lot of power here in this pound New Zealand. Look at that gap between these two moving averages. Tremendous. A lot of momentum. Whew, that's really a big one. Ah, now I know why. It's the 13 EMA. Okay, that's fine. But still, big gap. But there's divergence too, so it doesn't look as suitable as the EuroCAD pound CAD in my opinion. Those look the best. Let's take a look at some others. Gold, it made like a double top here, in fact, interesting. It's falling pretty fast on this 50-minute chart. You got bearish moving averages on the 15. Interesting. Past the L3, this was an interesting short because the moving averages was bearish. Daily pivot was already broken. You can see it stopped at the L3, but when it broke below it, it's really accelerating pretty fast now. That would have been a good break. Not sure if anyone saw that. I don't trade gold often, so, but you know, that would be the theory behind the moving average idea at least. So you can see a live example. taking place right now? How far could this go? As I said, overall, I think it's still bullish, looking at the 4-hour chart, but it could retrace back to the 38.2 fib, which is a daily S2 and a weekly pivot. So it could make that fall down to 1300 and then bounce. So that could be the target for today. Alrighty, let's see if there are any other pair maybe that maybe a bit more exotic pair. Let me take a look. New Zealand yen getting close to maybe some resistance here. Weekly R1, daily R1, ATR high. Maybe some rejection potential there. Is there any pair that... Oh, OddCAD. I'm looking at that right now, actually. Good. Kaylin is recommending OddCAD. Let's see. We have a Harami yesterday. Bearish week last week. Bullish moving averages there. Bearish on the daily. 4-hour bearish. Hourly a bit of a mix. Hmm. 15 looks flat, looking at the moving averages, bouncing off the daily pivot at the moment. That's not an easy one, in fact. Interesting. It seems to be quite a mix to me. Which direction were you looking at it, Caitlin? I'm just curious, actually. Because short, okay. Yeah, yeah, I can see that actually. If I think about it, daily and 4-hour are bearish indeed. Yeah, that makes sense. Yeah, we did break out of this. Looks like a rising wedge, in fact. Broke out of it, hooked back. Yeah, it does make sense for a break below this bottom to the downside. Could be a good follow through to the weekly S1. The moving averages are don't have the best of angles, but there's that space here. One way of maybe increasing the odds of getting a good break is looking for a candle close that is a strong close near the low below this fractal. That could help with getting a bit maybe better percentage that you don't get wicked in something that then might retrace stronger than we hope for. Oh, you already shorted it. Uh-huh. Good. Maybe there was some candlestick. Looks like a big wick. Just curious. Yeah, there were indeed. Harami here. A couple of shooting stars. A lot of wicks there at the 50 fib. Good job. Nice. Engulfing on the 4-hour indeed. Besides the breakout potential, there could be engulfing here. So waiting for a retracement back to about halfway that candle next hour could be another thing to think of besides that breakout. Ah, very nice, Kayla. Good to hear that. Great job. Yeah, so that's interesting. Let's see how this hourly, I would say, closes at the moment, and if it makes that retrace. Otherwise, maybe it would make a good breakout if the candle that breaks out is decent, or if we get a big wick, then I would rather wait for the second go through. Often if you see price moving, and if you have a wick on that breakout candle, you see kind of like a hook back, and then you might get the fall again. Yesterday was a perfect example with the pound odd. No, actually not a perfect example. But this candle broke out, made a hook back, and fell after that. So the second breakthrough went very well, did a great job. Now, actually, this breakout candle wasn't too bad, in fact, so it's not a good example, but it is an example of a break, pull back, and go, obviously. But maybe I can find a better example that had a bigger wick. Can't remember at the moment. Maybe the dollar CAD, actually. I was looking at breaks yesterday on the dollar CAD. So that is a good example. Yes. Let's take a look at that here. No, not a good example. Well, let me say it this way. Here we had a wick, and we got a pullback go, but it's not a perfect example because this was not the breakout candle, so it's actually not a good example. So not sure if there was an example I can remember yesterday. Let me think. Yeah, the odd USD. Yes, odd USD. Here, this was the breakout candle, right above this fractal. Well, it depends how you look at it. If you were looking for this fractal to break, actually we had a good candle breaking it. If you were looking for this one, we had a wick. In any case, after this pin bar, we had a bit of retracement. If you then look for the bounce off of the continuation, then this would have been a good candle. Why? Well, first of all, it's pulling the short-term moving averages to the upside. It's a strong close near the high, and it's breaking all of these previous bearish bars, these highs here. So that was a good continuation candle. So this was not a good breakout with the wick. You got the pullback as expected because of that wick, but because the trend is still up, you get the continuation bounce here, and an entry here would have been perfect instead of here. Saves you 8 candles, you get a better price, and you enter at the spot where the trade goes our way. Yeah, so if you, depending on which breakout you were waiting for, I was waiting for this level to break personally, not this one, but if you wait for a breakout above this level, above a fractal, above any level you deem interesting, then you can look at the candle, how it's breaking out, to judge if it's a decent breakout or not. In this case, we see that the candle with the blue arrow or the green arrow that is sticking above that blue line had a big wick and closed bearish on top of that. So it's not a candle that had a lot of momentum that shows a good breakout. It shows a pin bar or a rejection, actually. So then I wouldn't take it. I would rather, because the chances of a pullback are just pretty high, which we do get. We get the pullback. So the next doesn't mean, though, that the upside is out of the play, because this is just a 50-minute chart. Is definitely showing still upside. Look at this, right? Bullish moving averages aligned, right? So this is probably most likely a pullback for more upside still. Plus, at that point, I remember very clearly yesterday we had pivot points and Camarillas levels that were higher. So there was still space for price to move, further. So if we then look, what could be a good entry bar? What I would be looking for is this bar, where I have the green dot. Why that green dot? Why this one? Because if you use the short-term moving averages, the two crossed the 4 just barely, but it did. Or the 1 crossed the 3 for sure if you're looking for a bit more aggressive confirmation. But also the candle close was near the high. This is actually the continuation bar. That most likely signals the end of this pullback. So an entry there is early, but would have been optimal. Stop loss below here, or below this fractal. The exit, well, it depends how long you were trading at that point in time, because this is already getting into Asian session. This was a late entry, but in any case, wherever the exit was, it was above the entry. So, but if you were looking for fractal exit, then actually, the stop loss would be probably still at break even. It would still be in that trade if you're looking to trail stop fractals. If you're looking to a tighter stop loss, then the exit would have been around here. Or here even. So nothing spectacular, but it's just to prove because we didn't get a lot of follow through, it's just to show, not prove, but to show what I mean with regard to that candle. Alrighty, folks, otherwise than this, I don't think much is going on. Seems to be pretty slow market to me. Your CAD is pushing. Pound CAD actually made a retrace, interesting enough. Pound CAD. Oh yeah, that's the one I was looking for actually. I was looking for a retrace. No, that was the Euro CAD. That was the Pound CAD? Now I don't remember. I think it was the Pound CAD. I was looking for a retrace. Yes, it was. That is actually pretty aggressive bar up. That doesn't look that nice, which is a pity. But still, maybe it's retracement. If it takes too long, if it doesn't move down this bar or next bar, and this closes like a doji, could be even worth closing it for a small 5-6 pip loss, because this is an aggressive bar that doesn't look like a bearish continuation at all, which I don't like. So if it doesn't move down fast, this bar doesn't close bearish, I would probably close it, because then I wouldn't want to live through that. Then there's something else is going on, and this break didn't get any footholding despite the break. Well, yeah, let me see. Why did I take it again? Why was I thinking about this? Let's take a look. Let's see. There was the break of this bottom, basically, I think. Plus bearish moving averages. But at the moment, the hourly is looking more like a pin bar, and that's not good. So at the top of the hour would be important. Needs to close bearish, this candle, otherwise it's a pin bar. If it ends up like an hourly pin bar, I would forget it. So we got 13 minutes left. because that doesn't look good. The hourly looks like a pin bar, doesn't look like a good break at the moment. So yeah, if it behaves like this the next 30 minutes, try to reduce the risk as much as possible. The EuroCAD is maybe a bit different because maybe the pound is going up and the euro is going down. Let's take a look. Yeah, euro is going down. Pound is going up. The pound is, of course, a bit risky as well because of that Bank of England governor speaking. I forgot about that. That is still a while from now. $1:42, but I don't know. Still be careful. The EuroCAD, if it closes with a good close, it could be a good breakout for downside. Doesn't necessarily have to be the entry right away here, but there or maybe a small retracement could be worth it. That's actually, if I remember, the only one that seems sufficient at the moment for a setup for moving averages, at least, as far as I remember. Let's see, this account, yeah, this is a practice account that is about the same at the moment because I only take example trades. So yeah, that is not going to provide the consistency that is needed because to make something grow, you gotta use the same strategy week in, day out to get that edge. If you trade one trade once in a while there and you use that strategy, then there could be some growth. It could be flat. It could be some loss, but it doesn't would not provide the edge that is needed. All right, folks. Well, today doesn't seem that interesting, but yeah, only the EuroCAD and PoundCAD, but the PoundCAD looks a bit awkward. Otherwise, maybe some reversal ideas. I had a feeling that there was some breakout trade that was on my mind that I forgot, just to summarize, but I don't remember. I should have to write this down. Otherwise, I remember just so many pairs we look at. Maybe not. Maybe, doesn't matter. In any case, we went through all of them, so I'm sure that if you found it interesting that you remember. Thanks for joining us. We'll be back tonight. We'll take a look at strategies using Bollinger and Keltner and Avalops, Menet and I. So I hope to see you then, 6 p.m. and wish you a good day in the meantime. See you soon.